In this video, traders are going to look at, is the NYSE tick range important? Stay tuned. Hey traders, warm welcome to you. All right, what I did want to talk about is the ticks. I've talked about ticks on the channel before a little bit, and they played an important role when you're selecting your trades, and it's so important for understanding, hey, I'm not going to get caught out in trades I don't want to take, specifically if you're day trading the US indices. So if you're S&P 500 trader, trading the ES futures, spread betting the Dow, those kind of things, this is useful. All right, guys, so range is high minus low, and I'm thinking of 1 minute chart here. This is generally what your tick index is going to look like, right? Your tick index, just as a reminder, is the number of stocks on the New York Stock Exchange trading on the offer minus the bid. So in other words, it's the amount of buyers' aggression. I call it like an aggression meter, because if you've got a lot of people hitting that offer or hitting that ask, bang, 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 and not a lot of people hitting the bid across the universe of stocks, that suggests there's lots of the buyers are more aggressive on a global scale, or not a global scale, on a larger scale, just talking about NYSE here, and vice versa. If loads of people are hitting bids and there's not many people hitting the ask, not hitting the ask and happy to sit on the bid, that tells me the aggressor is the seller. The seller is more aggressive in this instance. So that would indicate that, hey, potentially, you know, if those bids start to crumble, market will start to roll over. And the idea being that because it's broad on all stocks, and a lot of those stocks make up the index you're trading, as they start to go lower bid, lower bid, lower bid, that's going to affect the futures market, and that's how you're going to affect your trade if you're trading it, especially from the short side. Right, so broadly speaking, this is what our chart seems to look like, okay? We have ticks, just standard bars, and open, high, low, close. The open and close isn't that relevant for ticks. In fact, it's irrelevant for ticks. What we're looking for is the higher the tick or the lower the tick. Now, I've done a brief video. I talked about tick trading strategies before, how we can use the tick index as a trading strategy. But this video is about a really useful filter, to be honest with you. What you can do is you can put your tick index up. By the way, any charting platform, put in tick, and it'll be there, NYSE cumulative tick or NYSE tick index, something like that, comes as an index from the NYSE. They actually publish it. So it will look something like this. You want to adjust your scale, so you've got plus 1,000 minus 1,000, or plus 1,500 minus 1,500. Draw some lines in because it tends to move like this around the 0 point. As you can imagine, when there's 100 stocks, say, trading on an uptick, 100 stocks trading on a downtick, the number's going to be 0. Plus 1,000 is a high reading, minus 1,000 is a low reading. Forget about that for now. What is important is the range of these ticks. Look at the distinct difference between the ranges here and here. Okay, so that might be one bar, or one candle, or one bar is a bar, and this might be the next one, right? So in 1 minute, you're getting an extreme of the amount of people who are buying on the offer versus the amount of people who are selling on the bid. And that's interesting, because what it means is there's a lot of people doing business. And so what you can do is you can start to plot the range by using an ATR on a 1 period, or have your own function made up. And you can start to see a histogram of more ranges. So for example, you might have like low ranges here. These are all low ranges, and all of a sudden, we're starting to get higher ranges. It's not necessarily giving us a value of the tick, but what it's saying is, hey, listen up, man, listen up, stuff's happening. People are buying, selling, people are interested. Breakouts are more likely to happen. Be careful with your mean reversions. Be careful about your stock placements. Be cautious. Market conditions have changed. Biggest nemesis for day traders, guys. We're in the middle of the day. It's trading nicely in a range. All of a sudden it starts to break out. We need to be quick to pinpoint that as soon as possible. Often if we do it too late, we give back some money. So having something like this, especially for, obviously for a day trade the US indices, something like this says, hey, you know what, more and more money's coming on the offer, more and more money costs on the ask, on the bid, and we're getting those extremes, and it's changing within that 1 minute period. That's interesting, because now we can go, well, okay, right, maybe we're in a position, what's the daily chart looking like? Or what's the intraday chart looking like? Are we in a position to start buying pullbacks here? Are we in a position to look for range expansion? Are we in a position to look for volatility expansion? Is something going on that's conducive to the plan and idea I've got? And that was part of the webinar. I talked about how we go through the plan, daily rituals, looking at ticks, looking at range, looking at tick range, looking at overnight volume, looking at overnight range, should I say. Looking at T volume, all these kind of stuff. But for this video, guys, the range and the ticks, super easy to do, super useful, and you don't have to get into, if you're not really that in the ticks, ticks, I'm not that bothered, then maybe not with the setups from ticks. But you can use it as a filter and to help you note, because straight away you can go, well, that's the biggest range tick of the day. Literally within 1 minute, the biggest range tick of the day can tell you conditions are changing potentially within 1 minute. If you had a moving average or something, it'd take you ages to work that out. You're looking at, was that just a spike? Is that this? Is that just a big candle? Because a big candle could come anywhere. But a biggest range tick of the day, especially if you get it again and again and again, you're like, okay, well, something's happening. Money is flowing in or out of the stocks, so I should be interested, I should be paying attention for it. This is useful, guys. Go and check it out, have a play around with it with your charting setup. Like I say, most chart packages have got it. Tick, put it in there. You have to mess around with your scale a little bit, maybe make those like a standard color, like a white or something, so that you don't really bother about the green or red. And plot an ATR on it and just see, and you'll see how it's very good at telling you when conditions have changed. Anyway, guys, if you enjoyed the video, thumbs up, take the care and see you next one. Keep your risk managed. Bye-bye.